What is seigniorage? Have you ever wondered how governments make money just by creating currency? This concept is known as seigniorage. Seigniorage is the profit that governments earn from producing money. It comes from the difference between the face value of currency and the actual cost to produce it. For instance, if it costs 5 cents to print a $1 bill, the seigniorage is 95 cents. This profit allows governments to fund various expenses without needing to raise taxes or borrow money. From a free market and fiscal policy viewpoint, especially regarding Federal Reserve oversight and national debt, seigniorage serves two main purposes. First, it acts as a low-cost funding source for government operations. However, if a government relies too heavily on seigniorage, such as printing money to cover debts, it risks devaluing the currency and causing inflation. Fiscal conservatives often criticize this practice, viewing it as a hidden tax on savings and wages. This erosion of purchasing power happens without clear legislative action. In discussions about Federal Reserve audits and deficit reduction, some argue that unchecked seigniorage can lead to irresponsible financial behavior. When central banks buy government debt, like bonds, by creating new money, it artificially boosts demand for these debt instruments. This can disguise the real costs of borrowing. Such practices can distort the market and lessen the pressure on governments to make necessary spending cuts or reforms. There are practical implications for conservative policy analysis regarding seigniorage. One concern is inflation risks. Overusing seigniorage can dilute the value of currency, which disproportionately affects fixed-income earners and savers. This is a key issue for those who advocate for sound money policies. Another concern is debt accountability. When governments lean on seigniorage, they avoid making tough decisions about taxes or spending, which can worsen long-term debt issues. Additionally, there are calls for greater transparency. Advocates for auditing the Federal Reserve often stress the importance of tracking how seigniorage and monetary operations relate to public debt. This ensures that Congress and voters understand the true costs associated with creating money. By focusing on maintaining a stable currency and cautious monetary expansion, conservative frameworks view seigniorage not as an easy revenue source but as a tool that requires strict oversight. This approach aims to prevent misuse and safeguard economic stability. Understanding seigniorage is essential for grasping the broader implications of fiscal policy and the management of national debt.